Ladies and gentlemen, good day and welcome to Q2 FY23 earnings conference call of Titagarh Wagons Limited, hosted by ICICI Securities. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ashwani Sharma from ICICI Securities. Thank you, and over to you.
Yes, thanks, Yashashri. Good day, everyone. On behalf of ICICI Securities, I would like to welcome you all for the Q2 FY23 post-earnings conference call of Titagarh Wagons Limited. From the management, we have Mr. Umesh Chaudhary, Vice Chairman and Managing Director, Mr. Anil Agarwal, Director Finance, and Mr. Saurabh Singhania, Group Financial Controller. We will start the call with opening remarks on the results and outlook by Mr. Chaudhary. Post that, we can have the Q&A session. I would now like to hand over the call to Mr. Chaudhary for his opening remarks. Thank you, and over to you, sir.
Thank you, Mr. Sharma. Very good afternoon to everybody, and thank you very much for joining this Q2 or H1 quarterly earnings, half-yearly earnings conference call of Titagarh Wagons. I will start by presenting a few highlights that has happened in the quarter. We had mentioned, we had announced in the past about the possibility of getting the government of Italy as an equity partner in our Italian subsidiary. And that transaction has gotten materialized and concluded in September, in the month of September. On the 8th of September, the government of Italy entered into as a shareholder into Titagarh Firema, and the government of Italy, along with the private equity investor, today own 44% of the equity capital of Titagarh Firema. This, apart from giving us giving that company some capital, also brings in a lot of strategic soft advantages by having the government on the same side of the table. It brings in immense value in terms of opening doors and in terms of guidance. The Italian government is also represented by 2 nominees from their side on the board. The other important milestone that has been achieved during this quarter is the merger of Titagarh Bridges, which was a 100% subsidiary of Titagarh Wagon, which was filed with the Honorable NCLT quite some time ago. The scheme has been sanctioned and been made effective. As a result of that, today Titagarh Wagon has only one subsidiary which is residual, which is Titagarh Singapore. Apart from that, there are no other subsidiaries that remain for Titagarh Wagon. This helps us in cleaning up the overall corporate structure, in having it much more simplified, and that would help both governance, management, and in terms of reporting, it will be much clearer and better. And the last, but definitely not the least, but the most significant, that Titagarh Wagon has reported its highest ever quarterly revenue and earnings for this quarter. I'm happy to share that we've been able to increase our quarterly revenue to 622 crores for the September quarter, which is by far the highest ever. And if we kind of compare it to the revenues that Titagarh Wagon was making on annual basis just about 3-4 years ago, which was about 300 crores in a year, 300 to 350 crores in a year, we have in the last 3.5 years come a long way in being able to achieve this milestone. Having said that, this brings us to a run rate of, we have produced up to a maximum of around 650 wagons in a month. 600 wagons in a month till now, close to 600 wagons, slightly less. But we have to achieve within the next couple of months, we are targeting to achieve a run rate of 700 wagons a month, which is based on what the order has been received from the Indian Railways. And we are expecting that we should be able to further better our quarterly revenues with the help of this increase in production. The EBITDA in September stood at 71 crores, and this also is a 56% jump compared to the same quarter last year. In terms of overall development, the three business segments that we have: freight wagons, passenger trains, and shipbuilding. So our focus in the quarter was primarily on improvising the production and streamlining the production processes. That emphasis continues in terms of improving both the productivity, the costs, and the production on an overall basis. And now we would again put a lot of focus in building up further order books, particularly in the other segments. So going forward, I would say even in Q3, our focus will be to ramp up production. And Q4 onwards, the focus will be to continue with the production levels that we have achieved and to start focusing on the ramp up of the order book. You would observe that the margins this quarter are EBITDA margins are more than what we had guided. This is on account of several factors. One, of course, is the increase in production in itself, but also because there were some tailwinds available externally in terms of the correction of steel prices. As I have mentioned, that the order book, that the kind of orders we receive from most of the clients have a price variation clause, and the price variation clause normally has a lag of a couple of months. So this in effect, when in the case of increasing steel prices, can reduce the EBITDA margins in a quarter, and in case of the falling steel prices can increase the EBITDA margins in a quarter. But we continue to give the same guidance as we had given in the past of keeping between 8 to 10% of EBITDA margins on a blended basis over several quarters. There can be quarterly variations too. This is in a nutshell the highlights of the quarter. The total order book in September stands at 10,040 crores, which is majority in the freight rolling stock, about 8,500 crores on the freight rolling stock, about 1,000 crores in the transit, and 360 crores in the SPV. In terms of overall performance, if we look at the consolidated performance, so this time the standalone and consolidated are pretty similar. This is primarily on account of the deconsolidation of the overseas subsidiary that has taken place. There is no longer, after the investment of the Italian government, the necessity to consolidate the line-by-line P&L and balance sheet of Titagarh Firema into the Titagarh wagon results ceases to exist. And this has helped in improving the balance sheet quality of Titagarh Wagons. The debt levels, the consolidated debt levels has come down from the levels of about 700 crores to 200 crores. Our net debt level was 817 in March 22, and the net debt level in September 22 is 114 crores, including short-term debt. In terms of the consolidated, and in the presentation on page 6, we have demonstrated that the standalone and the consolidated results are almost similar, both for the half year and the quarter, because of the necessity for not consolidating the Firema results into the consolidated results of Titagarh Wagons. In terms of, I would just give just speak a little bit about the investments that we have in Titagarh Firema, the Italian associate company of ours, no longer a subsidiary. In terms of the company is concerned, we were able to effect management and the board restructuring post the investment from the government of Italy. There is a new board that has taken over. There have been management changes that have been effected. And as a result of that, we are expecting significant improvement in both productivity, efficiency, and cost reduction. We are continuing to focus on one side streamlining the production, and on the other side building up the orders, whereas we have been able to in Italy reduce a lot of the fixed costs by consolidation of the site and by reducing several, almost 150 to 200 people who were hired across the verticals in the Italian company and without enough workload. So with these steps that have been taken, we believe that we continue with our target to try and get to EBITDA break even or EBITDA positive, if not on the full year basis, but definitely on the second half of the current year basis. And next year we are expecting to be on a PAT positive for Titagarh Firema. So that concludes the initial presentation on the overview of the company, and I'm happy to take any questions that might come up. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Hemant, an individual investor. Please go ahead.
So congratulations on very good set of numbers, and thanks for providing me the opportunity. I listened to the opening remarks. We have around 10,000 crores of order book, worth of order as on 30th September. So given this strong order book, sir, what kind of revenue we are targeting for FY24? We have already guided for the EBITDA margins in the range of 8 to 10%. So any sir, some color on the revenue figure?
Thank you, sir. We would not be able to give any guidance on the overall revenue, but what we can say is that we are already at 620 crore of quarterly run rate. And I did mention to you that we are at a little less than 600 wagons per month. So, and we have to increase this by another about 20% to 30% in terms of production. So obviously we expect further enhancement of the revenues that we are likely to generate in the quarters next year.
So sir, this 10,000 crore of order book, what is the time frame in which we have to execute this?
Different orders have different time frames, but the bulk of the contract, which is from the Indian Railway, has to be executed in 3 years, starting April this year, June this year, sorry. So that is June 2025. So the orders have to be primarily, the last of these orders will be executed by June 2025, and then the different orders will be executed at different points of time.
Sir, I had attended one of the previous calls in which we also had around 10,000 crores worth of order. So is it fair to assume that we have not gained much of the order in this 3-4 months?
We have executed orders also, sir. So if you see that in the last 6 months, we have executed almost 1,100 crores of orders, and we continue at same order book. So the book-to-bill ratio is almost 1 to 1. And the orders are normally placed on an annual cycle basis in our business. So the smaller orders keep on trickling in during the year, but the large orders come on an annual basis. Like we got this large order in the month of May, June 2022. The next tender would come out after the next budget is announced.
Oh, okay. So, sir, are we expecting a significant order inflow also at that time?
We are the largest freight wagon manufacturer in the country, so definitely we have a leadership position, and we are also establishing ourselves in a very significant way in the passenger train or metro segment. So, of course, we would expect to build up an order book which is commensurate to our growth plans.
Okay, sir. Thanks a lot. Thanks a lot, sir.
Thank you.
Thank you. We have our next question from the line of Azeb Parbatani from Omkara Capital. Please go ahead.
Yeah, just a couple of questions on the metro side. So can you provide any update on the CRRC tie-up with the company for the Bangalore Metro? Any execution timeline if you can provide on that side?
Sure. We've already signed the contract with them and the work has already started. The execution is scheduled in FY24 and partly in FY25, and we are on track as far as that is concerned.
Okay. And next thing is I have read some news regarding there's a problem with the wheel sets supply. So anything on that part?
We have not faced any such constraints, and we have been able to so far manage our wheel set supplies based on our requirement. The railways have also increased their capacity of supplying wheel sets. So the answer is, challenges in supply chain are in general existing because of the various geopolitical scenario around the world, but it is not something which is kind of blocking us from achieving our targets.
All right. All right. Thank you very much.
Thank you.
Thank you. We have our next question from the line of Sarvesh Gupta from Maximal Capital. Please go ahead.
Good evening, sir. Sir, one question that I wanted to ask in this 600 wagons, so you have done around 1800 wagons in quarter 2. Is that right?
No, I'm saying that we have been able to achieve close to 600 on a monthly basis on 1 month, but it's not an average production for the quarter.
So what has been the average production?
It is continuously being ramped up. So the maximum that we have been able to touch is around that till now. We have to touch or cross 700, which we should be able to do over the next few months, 3 or 4 months.
So what was the sales or production in quarter 2 as a whole?
We don't disclose the exact number, but what we have, it's kind of, if you figure it out from the extrapolation of the results, each wagon costs about 35-36 lakh rupees, so you'll be able to get the numbers from there.
Okay. And, you have also said that non-wagons are expected to contribute more than 50% of the order book. So right now, almost 80-90% of the order book will be wagon and this railway order related. So by when do you expect the non-wagon to contribute more than 50% of the order book?
I had said over the next 3-4 years, we are targeting to have more than 50% from other than the freight wagons. So we've just started the journey, and we wanted to also create the base. So the wagon base is already created. Now the other businesses base would get created in a larger way. So that is how we would be able to grow the overall size of the cake.
Understood. And since we are going into a much higher sort of utilization level because of larger orders, so, and we are still ramping up the production, then, we are at 11.5% EBITDA margin. Then why do you expect the EBITDA margin to go down to a normalized level of 9% when we are ramping up the production? What will lead to your EBITDA margin going down? If you can explain that.
It's the market forces. It's not about our efficiency is only improving, but the market forces is not something which is in our control, which is i.e. the steel prices, the commodity prices, etc. And as I mentioned to you that if you look at the historical numbers over the last couple of quarters, our EBITDA margin is about 9-10%. And while in terms of giving guidance in the future, I would rather be conservative and not be overtly optimistic, because the commodity prices and the input prices movement is something which is not completely controllable by us. So in our industry, if we are able to get around 10% of EBITDA, that should be a normalized EBITDA levels. If we are able to, of course, get, last year we were able to report a higher EBITDA of almost 12-13%, and obviously our endeavor will be always to get to higher EBITDA levels. But the guidance that I'm giving is based on realistic, achievable numbers, that based on the industry general practices and standards is the EBITDA margin that we can expect.
And at these margin levels, what kind of normalized return on capital employed are you targeting?
In terms of the return on capital employed, it will also depend upon the growth that we are able to make in the different segments, because a lot of capital has been invested in the two new segments, which is the transit and the metro, and also in the shipbuilding, bridges and defense. Those divisions are now starting to contribute, and they will contribute over the next couple of years. And definitely we'll be able to get to more than double-digit kind of ROCE. But it's not something that we say that we'll be able to get tomorrow. We will, over the next 2-3 years' time, when all the businesses are delivering to their potential, we should be able to achieve that target.
No, only on your core business, what kind of return on capital employed? The wagon manufacturing core business, which is contributing 90% to our standalone profits and revenues, what kind of return on capital employed are we targeting at these order book levels?
It would be similar to what we are achieving now. So you can check the capital employed in the segmental reporting. We have also broken up this year the segmental reporting in the 3 business verticals based on the 3 operating lines. So we are achieving, I believe, double-digit ROCE in the freight wagon business, and we should be able to continue to achieve the kind of ROC. So I don't think that there is going to be a significant. We are already, as I said, we've touched close to 600. We are targeting to get to about 700. So there would be about a 15 to 20% improvement in ROC there.
Understood. And in your Italian operations, you said that you are targeting EBITDA break-even this year and PBT break-even next year. But in your Q2 FY23, your profit from discontinued operation is already being shown as a positive 12 crore for this quarter. So can you explain the maths, like what happened to the subsidiary financials, why it is positive?
Yeah, if you see the notes to account, there are other one-time exceptional items that have been booked this time. We were able to receive some claims with respect to the former French investments that we had, and also certain of the liabilities that were provided in our books have been written back. So it has been elaborated in the notes to accounts, which will explain to you why the profit and loss from discontinued operation is on a positive side.
Okay.
The note number 4 of our CFS would give you the clear idea.
But excluding what kind of are we
Mr.
expecting?
Gupta, your voice is breaking, and I request you to come back in the queue.
Sure.
Thank you. We have a next question from the line of Rajesh Bhandari from Nakoda Engineers. Please go ahead.
Yeah, good afternoon, sir.
Good afternoon.
Hello. Yeah, good afternoon, sir. Yeah. I heard that now the wagon production would be approximately 700 numbers per month. On that basis, we can expect that for the next 2 quarters, the growth in revenue would be approximately 40% from the 2Q?
So, as I mentioned that we have been able to get to around 600, close to 600 in one of the months in the previous quarter. 700 number we should be able to achieve by either the Q4 or Q1 of next financial year. We are continuously ramping up the production. Our target is that between Q4 of this financial year and Q1 of next financial year, we'll be able to reach that number.
Okay. And we have an order book of 10,000 crores. But if we go by the turnover, it is 4 years' time it is going to take approximately.
It is on an increasing basis, sir. If you look at the March quarter, we were at 300 crores. At the September quarter, it's at 600 crores. So obviously, when we have to, our contractual requirement is to complete it by June 2025. We are very confident we will be able to meet up with our contractual requirement.
Yeah. And what are the expected order books, sir, for the next 2 years? Expected only.
Economic activity is very strong in the country. There is a lot of focus on infrastructure. The railways have, in public domain, stated that they are the mission 3,000 million tons from the current levels of 1,400 million tons. So that is almost more than doubling their throughput by 2030, which is in the next 7-8 years. So we believe that the demand traction, barring unforeseen circumstances, should be very strong, and the workload should be healthy.
And are we expecting any big orders, sir, in the near future?
We are always participating and trying for different big and small orders, but as a matter of prudence, we would not disclose or talk about any opportunity that we are working on unless and until that is clarified.
I understand. Sir, Italy में जो recession का problem है और अभी तो अपना control भी वहाँ पे खत्म हो गया है, how it is going to affect our working and balance sheet?
So, as far as it has been disclosed in the notes to accounts, the total investments in the books of Titagarh Wagons into Titagarh Firema is only 12 crore and some lakhs. So the total in terms of the downside as far as investment is concerned to Titagarh Wagons balance sheet is limited to this amount.
Okay.
The upside remains very, very, very strong. The potential upside. So we, of course, we believe that the company has great infrastructure, and the European market for railway, particularly in view of the decarbonization, in terms of the environment consciousness and so on and so forth, is going to continue to be strong.
But अभी अपना जैसे control नहीं है, sir, 49.7 है, तो will it be counted in our turnover also?
No, it will not.
It will not. So how it is going to be helpful to the shareholders?
Couple of things. Number one is the pro rata share of profit that will come in the P&L of the Titagarh Wagon, and the second is the value of investments.
अच्छा सर, एक जो NCLT केस जो है अपने ऊपर में, how serious it is?
Well, it's a matter sub judice, so I would not like to comment how serious it is. We have already disclosed about it. It's a claim of 91 lakh rupees, which was filed in response to our claim of 8 crores. So our case against the same company was filed much before, and as a reaction or a reciprocation to that, they have filed this 91 lakh of claim. We personally believe that the order issued by the Honorable NCLT is not correct, and therefore we went for an appeal. And the appellate authority has, on the face of it, seen merits in our argument, and that is why they have stayed it.
So there are no chances of any serious implications. Okay. Thank you.
Thank you. We have our next question from the line of Varinder Bansal from Omkara Capital. Please go ahead.
Thank you, sir, for this opportunity. So can we assume that in quarter 3, we should do between 1900 to 2000 crores of wagons, 19,000 to 2000 units?
1900 to 2000, you are saying?
Yes, sir.
Well, again, I would not like to give any forward-looking numbers, but I mean the max gets close to that, I would say.
No, but I am asking because you said the ramp up will only happen from quarter 4, like the 700 units per month, right?
That's right.
Okay, sir. Just out of curiosity, are we facing any ramp up or manufacturing issues at all to take up, to ramp up the capacity?
Definitely, sir. There are always, challenges that are there in ramping up, and that is why it takes time. In a manufacturing facility like ours, in an industry like ours, there are many challenges that are there, which is supply chain challenges, machinery challenges, manpower challenges, mental challenges, and so on and so forth. But that is exactly the job of the management to ensure that we are able to overcome these challenges. And we are extremely confident that by Q4 this year or latest by Q1 next year, we will be able to achieve our targeted production.
Got it. Sir, what is the kind of delta we get in terms of margins with the fall in steel prices? Because steel will be our major percentage of COGS, right? And steel and inflation.
Sorry, I didn't get your question. Can you just repeat, please?
I said if I have to understand that what is the kind of delta we get, if steel prices come down. Is there any calculation we have done in terms of the impact of fall in steel prices on the margins of the company? Like now, we seem to be in a good position because the order book is there, execution is picking up, and the cost of raw materials is going down.
So most of our contracts, Ms. Bansal, are with price variation clause, which have an upward and downward variation clause. So when the steel prices go up, the railways or the customers reimburse us for that increase. And when the prices go down, they deduct or they reduce from the prices. So effectively, our margins remain constant. The only difference that happens is that this is linked to the wholesale price index, which is tagged to 2 months before the date of supply. So as a result of this, there can be from a quarter to quarter a lag of implying or the enforcing of the price increase or decrease from the actual movement of the commodity prices.
Understood.
But that's exactly why I said that on a blended basis over quarters, the margin levels are not speculative, either upwards or downwards. They are the wholesale price.
Okay, no, I was just curious because Jupiter, one of the peers, Jupiter, they do better margins. I wanted to just understand why is that.
We will not be able to comment on that, but I can only say that our company is definitely one of the most efficient manufacturers of wagon, and we have always been so.
Got it, sir. My last question, while there is a visibility of this,
in the queue.
Can I just repeat the last question? It's linked.
I request you to come back in the queue, sir.
Okay, thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to answer queries from all participants, kindly restrict your questions to 2. We have a next question from the line of Ankur Jain from Jain Investment. Please go ahead.
Namaskar, sir. My question is that what is regarding the propulsion system, what is the time frame for profits from that coming into the company? That is my first question. And the second thing is, Hindalco has come into this manufacture aluminium wagons. So what is the kind of threat which you are facing and with respect to our bid pipeline, and which is the current one? What is the current bid pipeline that we have, sir? Thank you very much.
Thank you, sir. Namaskar. The first question is on the propulsion. I should have mentioned this in my opening comments. Thank you for pointing it out. I'm happy to mention that our First traction motor has been approved by the Indian Railways, and we have been the first prototypes of 6 traction motors produced in our factory are now getting fitted as we speak. They are being supplied and fitted into the Indian Railway system. The actual profit and loss by the time it is actually resulting in the P&L of our company, we should be able to do that in FY24 to some extent, but FY25 is the real extent. So it is a very important and very strategic part of our business plan. In terms of Hindalco coming into wagon manufacturing, Hindalco has not come into wagon manufacturing. Hindalco is only the aluminium for the wagons were produced by Hindalco. The orders were placed by the Indian Railway for this aluminium wagon, where Hindalco was associated in the designing primarily on account of the defining the aluminium extrusions or the aluminium base for making this wagon. This was a order which was placed quite some time ago, almost 5-7 years ago, and of course the Indian Railway is going for a continuous jump in terms of technology, in terms of modernization, and the railway board at various levels have had several meetings to identify how modern, more efficient wagons can be inducted, and we will definitely be a front runner in this whole activity. In terms of the order bid pipeline, at any point of time there are several opportunities that we continue to work on. We are always very agile on this front, and that is how we've been able to achieve the kind of growth that we have. However, I would not be able to share more details about this, as I mentioned to the previous caller or the previous gentleman who asked the question, that we would not like to be speculative in terms of speaking about opportunities unless and until they are fully materialized.
And so one follow-up question regarding this propulsion system, that what kind of profits are we expecting, like how many crores and stuff like that? Means once it starts putting in, how much of profits can it generate?
I can only share with you, I cannot discuss numbers on the future, but I can only share with you that the propulsion business is going to be significant both in terms of making our transit business more competitive and also generating profits on its own. It is not going to be a kind of a very frill business. It is going to be an important part of the P&L in the future. Maybe it will take 3 years to achieve that, but it is definitely going to be an important part.
Okay, sir. Thank you very much.
Thank you. We have our next question from the line of Anurag Patil from Roha Asset Managers. Please go ahead.
Thank you for the opportunity. Sir, in Italy, are you facing any production disruption?
Sure. I mean, there are different kind of problems in Italy that we have faced in the past. There were supply chain issues, there were production issues, there were labor issues, but slowly and steadily those are getting resolved. One of the big challenges was to right-size the company, and in the process of right-sizing the company, that kind of added to some of the difficulties, both in terms of the unions, in terms of everything. But we have been able to achieve that in the last 3-4 months. It was important to create the base, to create the foundation. We believe that the foundation and the base has gotten created, and we will be able to build things up from here.
Okay. And sir, can you provide Q2 numbers of revenue, EBITDA, and net debt for Italy business?
We have already disclosed whatever we could have disclosed in the current scenario where Titagarh Firema ceases to be a subsidiary of Titagarh Wagons. We would not be able to disclose any other financial details of the associate company beyond what we have declared or announced in the results.
Okay, sir. Thank you very much. That's it.
Thank you.
Thank you. We have our next question from the line of Alisha Mahawla from Envision Capital. Please go ahead.
Hi, sir. Good evening. Thank you for the opportunity. What is the status of the Pune Metro project order?
Yes, good afternoon, ma'am. The Pune Metro execution is going on well. We have supplied more than 10 trains till now, and we are on track to be able to complete this order by Q4 this year or Q1 next year.
Are we facing any delay in execution?
No, we did face some delays in the past because of the COVID and the supply chain disruptions on account of the Ukraine war, but now we have been able to overcome those to a very large extent.
Okay. And earlier in the call you mentioned that for the Bangalore Metro order, execution will start in 24. Is that correct?
FY24, yes, ma'am.
Okay. And is it possible to quantify the value of this order, the Bangalore Metro?
We do not normally give contract by contract value unless it's a very significant contract. All I can say it is for 204 cars, and but bulk of the material required for this will be supplied by TRRC, and the designs will be given by them. So this is enabling us to upgrade our manufacturing facility to be able to produce stainless steel coaches. This is on a stainless steel coach tender or a contract. So this will enable us to be the only company in the country to have both stainless steel and aluminium production capability and capacity.
Great. And just one last question. In our freight rolling stock order book of about 8,500 crores, is it possible to share what is the share of private contracts?
Have you disclosed? I apologize, ma'am. We have not disclosed that number separately. What we do disclose is the overall order book that we have.
Okay, great. Thank you.
Thank you.
We have our next question from the line of Sanjay Kumar from iThought PMS. Please go ahead.
Hello, sir. Thank you for the opportunity. First on the wagons. So are the orders purely based on the basis of lowest cost, or are there any technical requirements in terms of quality? If you could explain a bit about the technical aspects in terms of foundry or the fabrication, that would be helpful.
Sorry, sir, I didn't understand your question. I mean, definitely there are technical aspects. It's a highly complex engineering product, so quality standards, technology, and all of that is inbuilt into the product itself. But if you could elaborate exactly what your question was, I'll be able to answer.
Is it because of the certain make of our foundry machinery or the consumables we use? Because another listed player now talked about using Concall Wagner, or for consumables, for Seiko. So can you name your vendors, or do we buy from local players, or does the foundry machinery or the consumables that we use, does it even matter in terms of the bids?
Ma'am, sir, we have more than 2,000 registered vendors that supply to us. So of course we have a lot of vendors who are there all over the country and internationally. And we have wagon manufacturing, and then we have our backward foundry. So I'm sorry, but I'm not able to understand exactly what I'm supposed to answer this, but we are buying from the best of vendors across the globe.
Okay. Who's the supplier for your molding machines, sir, or the entire foundry line?
Molding machines?
Yeah. Or the entire foundry line?
There are many suppliers. I don't think we'll be able to get into that detail, sir. I'm sorry.
Okay. And for the stainless steel coaches, can we use the existing foundry setup? And in future, if we participate in the aluminum coaches, so we'll have to set up a die casting foundry, right? Or do we already have all of these?
Sorry, sir. To the best of my knowledge, coaches are not cast. They are fabricated. So there is no foundry required for coaches.
Okay. And for the wagons?
Mr. Kumar, I request you to come back in the queue.
Okay.
Thank you. We have our next question from the line of Parvez Qazi from Edelweiss Securities. Please go ahead.
Yeah, good evening and thanks for taking my question. So two questions from my side. First, would be great to get your views on ordering opportunities on the private sector on the wagon side. And second, also your views on the Vande Bharat train tenders and what can we do maybe now, maybe in future to be a part of that opportunity. Thank you.
Thank you, Parvez. As far as the private wagon traction is concerned, it is very strong at this point of time. There is an overall economic boom that is happening, and as a result of that, many people, many important players are wanting to develop their own logistic capacity, and we see a good traction. As a company, we are focusing on the private wagon orders, and we are trying to maintain the correct balance between the railway and the private wagon orders. As far as Vande Bharat is concerned, I think it's a game-changing project. Right now, the railways have announced 400 trains of Vande Bharat, but I personally believe, and based on the announcement that we have seen in the papers and in the press, the railways is not going to stop at 400 trains. It is going to be the train of the future, and someone like us who is already in the train business, timing apart, we would enter into it. I mentioned this in an earlier call also. We are not going to rush into anything. We are going to move into a new business opportunity very carefully and in a very, very planned and calculated manner. So for us, Vande Bharat is a very strategic opportunity. We are definitely pursuing it. We are watching it, and we shall enter into it at the right time, whether it is now or it is slightly later. That is something that we will disclose when we have kind of performed our task.
Sure. Thanks and all the best.
Thank you.
Thank you. We have our next question from the line of Shubhankar Oza from SKS Capital and Research. Please go ahead.
Hi, thanks for this opportunity. So I have a couple of them. So basically, when you say that you're going to ramp up your execution of up to 700 wagons per month, so do you need to incur any capex for this, or your existing capacity will be enough to do so?
Apologies, I missed your question. Can you please repeat? There was some disturbance.
Okay. So basically, from 600 wagons to 700 wagons per month of execution is going to happen next couple of months. Do you have to incur any capex for the same, or your existing facility is enough to do so?
No, we've already done a lot of capex. We are continuing to do some capex. So some marginal capex is going to be continuing, balancing. When you move forward, the bottlenecks keep on shifting. So as and when we are incurring or encountering the bottlenecks, we are incurring the capex in order to remove those bottlenecks. So that is something that is a continuing process, and by the time we are able to achieve this targeted production of 700 wagons, which should be, as I said, Q4 of this year or Q1 of next year, we should be able to complete the capex requirement, and thereafter there will be the maintenance capex that will be a normal capex.
Do you have a 5 years capex guidance? Next 4 or 5 years?
Yeah, we do have. We had announced that, including the last couple of years, where we have set up the metro plant and propulsion plant, and also enhanced the wagon capacity qualitatively and quantitatively. We would be spending close to 1,000 crores across all our verticals. So beyond that, we've not really come out in public domain to announce the details of the capex, but on an overall basis, including the last couple of years that we have spent for the metros primarily, we would be spending between around close to 1,000 crores of capex.
And sir, finally, so with respect to the shipbuilding business, you have 300 crores of order in hand. What's the time frame of execution, and if you can share some thoughts on the outlook for this business in terms of order booking and execution time frame?
Sure, sir. So on the shipbuilding, as I had shared with you that we have acquired a shipyard on the south side of Havra Bridge in Palta, and we have not yet started the work on that, but we are likely to start the work next year in building up the shipyard there. We believe there is a large traction that we can get from both the Indian defense and otherwise also for specialized shipbuilding projects. And between our existing shipyard in Titagarh and the new one in Palta, we will be able to cater to different requirements. In fact, all the kind of targeted vessels that we have in our targeted production portfolio. The existing order that we have should be over in the next maybe 2.5 years time. And there are many opportunities that we are pursuing and will continue to pursue.
Thank you so much and good luck, sir.
Thank you.
Thank you. We have our next question from the line of Ronak Khaitan from Ishanika Securities. Please go ahead.
Good afternoon, sir. I wanted to understand what is the difference in the margins between the private wagon orders and the railway wagons orders, and also the kind of market share which we have in the private wagon space. That is my first question. Second question is there any difference in the receivable days, like a major difference in receivable days between the private wagon orders which we have and the railways orders? Thank you.
Thank you. So first is as far as the margin and the receivable days for the private versus the railways. Each contract, whether there is no one contract of private wagons. Each customer, there are several customers of private wagons and several types of private wagons. So each wagon and each customer has its own margin and its own receivable days. So it would be difficult or unfair for us to generalize the comparison of margins between the railway orders and the private orders. Having said that, private wagon orders sometimes do end up giving slightly better margin, I would say. But there are again private orders, like sometimes there are defense orders, etc., which end up giving very difficult margins because most of these private orders are on fixed price basis, and when an order for a long term from a private sector or a non-Indian railway is booked, the price variation risk or opportunity stays with the wagon manufacturer. In terms of our market share, we keep on, based on our capacity utilization, we have historically been the market leader in the private wagon market space also. And we had slowed down our private wagon order intake in order to stabilize our capacity in the beginning of the year for being able to ramp up the Indian Railway wagon order supplies. Having achieved that, we have again started booking orders from private sector, and we would be, I would say, at par with the market share of our sales in the private sector wagon space also as of now.
And about the receivable days, sir?
Again, it's on a customer-to-customer basis. So, we cannot generalize, but normally it's a capital good. There are not very large credits. So, there are, in private sector also, we normally, depending on the customer, we normally take pro forma payment, but also sometimes we give a small credit.
Okay. Thank you so much, sir.
Thank you.
Thank you. We have our next question from the line of Tushar Ragatate from Kamayakya Wealth Management. Please go ahead.
Yeah, good afternoon, sir. And congratulations for your good set of numbers.
Sorry, you're not audible clearly. Can you use the handset, please?
Yeah. Am I audible now?
Yes.
Yes, please.
Yeah. Good afternoon, sir, and congratulations for your good set of numbers. Sir, my question is on the freight wagon business. So basically, what type of wagons will have the high margin, whether it's flat or covered wagons or open wagons?
Good afternoon, sir. It's not possible again to generalize because again each contract has a different margin. So on a blended basis, I would say Normally the wagons, the way they are calculated is that there are certain wagons which have a certain higher throughput time, which means that if I have a 10 wagon capacity, if I make a complicated wagon, I'll effectively be able to make 5 wagons out of that capacity. And there are certain simpler wagons which have a lower throughput time, so on the 10 wagon capacity I can do 15 wagons. So it's kind of a misnomer to calculate a wagon by wagon margin. I would say that if we take the throughput time vis-a-vis the margin of a wagon, I would say they stand equated on a leveled basis.
Fair enough, sir. And sir, what would be the industry wagon manufacturing capacity and the optimum utilization level for that capacity?
So the assessed capacity of wagons by the Indian Railway is close to 30,000 wagons per year, and I believe that the industry has the capacity to produce that much.
So my last question, sir, on this wheel set, are we procuring 100% from Indian Railway factory or we are getting it from China?
We have different sources, sir. So we are getting from Indian Railway factory also. We are getting from different sources also, including from China in some cases.
Fair enough, sir. Thank you.
Thank you.
Thank you. We have our next question from the line of Ankur Agrawal from RC Wealth Solutions. Please go ahead.
Thank you, sir. Hello.
Yes, Mr.
Hello.
Agrawal.
हाँ सर, ये आपने जो प्रेजेंटेशन पीएससी साइट पे दिया है उसके अंदर पैसेंजर रोलिंग स्टॉक में बहुत थिन मार्जिन दिखाया है 3.4%. तो ये मेट्रो वर्क इसी मार्जिन का बिजनेस है या ये टेम्परेरी इतना कम मार्जिन पे चलता है?
सर मार्जिन जो होते हैं वो वॉल्यूम के साथ लिंक्ड होते हैं, क्योंकि अभी वॉल्यूम्स हमारी पिकअप नहीं हुई हैं ऑप्टिमम लेवल पर, तो मार्जिन जो है वो हमेशा उससे इंटरलिंक्ड होंगी. जब हम मार्जिन को अपना माने अपने वॉल्यूम्स को स्ट्रीमलाइन कर पाएंगे तब फिर हमारा मार्जिन जो है वो नॉर्मलाइज हो पाएगा. कई हमारी फर्स्ट टाइम में जो कॉस्ट एक्स्ट्रा भी लगता है और कई जगह में वॉल्यूम्स के कारण ओवरहेड भी पूरा रिकवर नहीं हो पाता है, तो उसके कारण मार्जिन डिस्टॉर्ट हो जाती हैं.
तो गोइंग फॉरवर्ड ये भी 10% मार्जिन कवर है?
जैसा कि मैंने कहा था कि और हमारी जो प्रोडक्ट अक्रॉस प्रोडक्ट सेगमेंट्स हैं उसमें बिटवीन 8 to 10% एबिटा मार्जिन जो हैं वो अचीवेबल है और वो हर एक सेगमेंट के लिए लागू करती है.
तो कब तक ये प्रोडक्शन रैंप अप होकर कब तक क्या लगता है कि आगे 23-24 या 24-25 में ये मार्जिन रिफ्लेक्ट हो सकते हैं?
हम लोगों का अनुमान है कि 23-24, 24-25 में हम ये एक रीजनेबल कैपेसिटी यूटिलाइजेशन में पहुंच जाएंगे.
ओके, थैंक यू सर. थैंक यू.
Thank you. We have our last question from the line of Sarvesh Gupta from Maximal Capital. Please go ahead.
Sir, just wanted to understand what kind of loss can we get from the Italian associate company for this year?
So, sir, as I mentioned a little while ago, the total value of investment in the books of Titagarh Wagons as on the 30th of September in its Italian associate stands at 12 crore some lakhs, as it has been stated in the notes to our accounts in note number I believe 3 of our accounts. So technically the maximum downside in the P&L for the on account of the Italian subsidiary is the amount of investments in the associated accounting method basis. But maybe I can request my colleague Mr. Saurabh Singhania to mention more about this.
So, as you guys must have read the note on note number 3 regarding the change in the accounting method, because Titagarh Firma ceases to be a subsidiary with effect from 8th of September. So, from 9th of September, in terms of the accounting principles, we have to follow the equity method of accounting, which is proportionate losses. So, and in the same accounting principle, the maximum amount of losses that can be booked is to the extent of the investment. So, as Mr. Chaudhary said that, the total value of investment of Titagarh Firema, which we are carrying in our consolidated balance sheet, is 11.5 crores. So that's to give you an answer that that's the maximum that can impact our results in the going 2 quarters.
And sir, I believe we had also given a lien of a land in India for the same. Is that still there, or has that been taken out?
So the lien on the Bharatpur land is still there with the lenders of Titagarh.
I'm sorry, sir, your voice was not audible.
I said the lien of the Bharatpur land is still there on the lenders of Titagarh Firema.
And what would be the value for that?
The land has other loans also associated in India to that. So the total value of that land would be about 140 crores, against which the lien is provided to the lenders of Titagarh Firema.
Understood, sir. Thank you and all the best.
Thank you, sir.
Thank you. I now hand the conference over to management for closing comments. Over to you, sir.
Well, thank you very much for the very insightful questions. They've been very valuable for us to get the perspective of the investment community. And thank you for the support all through. I believe that if we kind of compare the targets that we set out in the last 8 to 10 conference calls, quarterly conference calls that we've had, we've been able to, first our target was to build up the order book and then ramp up the execution. We've been able to a great extent achieve that. And now we would again like to stabilize the execution and go into the second phase of building up of our order book on all the 3 business verticals that we have. We believe that all the 3 business verticals that we have today have a great potential, have a large kind of a tailwind, and we are placed in a good spot to be able to take advantage of that tailwind and advantage of the environment. So thank you once again, and we would continue to look forward to interacting with you at the end of the next quarter.
Thank you. On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.